Hey, in this video, I'm going to show you exactly how to use this setup for yourself, as well as how to bring in real-time data. First, we're going to look here at the Tesla stock chart. This is the trade range that we have built here in the Bootleg macro model. What we're looking at is the range of Tesla. Right now, it looks like Tesla closed at $171.79. The top of the range is $182, and the bottom of the range is $136. Now, 182 is probably the lowest price that we've seen in all of 2023 when it comes to the range, which is not great. You'd like to see a higher range, especially considering that this time the price is getting closer to the top, and it has done that before, and then it promptly falls. That would be the concern that we'd see right now with Tesla. So when I go look at the raw data, which we'll do right now, the raw data actually looks slightly positive. I would say you're getting two go long signals recently on Tesla on Friday and Monday. It looks like we've got a 1 day and a 5 day positive rolling return. The 15 day, the 1 month, the 3 month, and the 6 month, not great. It is a negative return, which is difficult to do, especially considering that the recent lows have been like in the mid 160s, and we're in the 170s now, and it hasn't been so long since we were at 207 on the end of March. So we want to be really conscious of the fact that there could be strong demand in Tesla at any single moment. Even though the trade range looks like it's diving, granted, it looks like the price has generally been going a little bit higher than mostly lower. And right now, I don't necessarily believe that bank failures are the type of thing you want in the background of a growing economy, but there's hope. So I'm going to say for right now, I'd be more inclined to think that Tesla's probably going to go to 136 versus sustain any time at 182. Right now, if we look at the volume, it looks like the volume, at least from the recent indication, is generally positive. What you want to see is you want to see the moving average either flatlining like this or going lower. You want to see falling volume. Generally, lower volume means positive things, means like a grinding bull market, things like that. Unless you get like some people call it like a price earnings gap, or you get like a big catalyst that pushes a lot of volume into the stock. Most of the time, you're going to want to just see lower volatility and just a consistent buy coming in all the time. When we look at the Tesla, if you want to look at where you were in October of 2022 at $200, then you want to look at where you were in February of 2023 at around $200, and then you want to look at where you were in the end of March 2023 around $200. Now you're down at 170, and there's a possibility that we go back up to 200 for sure, but that just leads you to even more time around the $200 mark, which, no offense to Tesla bulls or Tesla bears, there's just more interesting places to play in the market. This, for me, has no interest. I only cover it because it's the daily active show. This is how you learn. This is where you get all your information. This is Bootleg Mac. Welcome. Tell me what you think in the comments below. Are you long? Are you short? Did I do a good job? So now we're going to look at Palantir. What we're going to do is essentially see what we think. It was the most active stock today on Yahoo Finance. Look at that. It really didn't go anywhere. You had huge volume though. Huge. You had 104 million shares traded. Where did you go? Let's look at this. Where did you go? You went to 774, 741. How big of a move is that? Why were you the most active? Did you have news? I guess 4.4%. That's pretty big. And you did have a big day of volume. I mean, again, you had 104 million. That's probably got to be the largest traded since February right here. So, I mean, I get it. That's a big day of volume for you, bud. But it's not a great signal. I mean, maybe, because the problem here is that you're negative. You've got a negative rolling 5 day, 15 day, 1 month, 3 months. You just kind of went negative. So the idea, yeah, this is not great. This is probably something to sell into. How close to the top of the range are you? How close to the top of the range? You could get higher. Okay, so you could go all the way up to 855. We're probably going to see this range come down over the next week, so we'll want to watch it. But it looks like anytime we're going to get a possible up move, at least recently, we're going to short it, because this looks like a market that's just not going to go. For whatever reason, if you want to play levels and you're really interested, maybe. I'm not going to be long or short this. This is a really not fun looking setup for me unless I'm a long-term investor and I believe in this. Maybe there's something there. Maybe there is. Price tells me everything I need to know. I won't go further than that. So I wish them nothing but the best, but right now this looks like a short. It looks like the volume that we just got was a big move upwards, only if there was a positive catalyst that you truly believe is actually going to connect and take a long period of time for it to play out. With that all said, I wish Palantir nothing but the best. Let's go ahead and look just to see. Yeah, the chart. Want nothing to do with it. Don't want to see it. Don't call me. Palantir. If you guys are trading it, if somebody can actually like make a ton of money on this, or actually like have positive alpha when it comes to Palantir, I would actually be really impressed, because that's going to be an expert trader who understands how to do very short-term swing trading, because the ups and the downs of Palantir are nice if you want to play levels and you really like to see that the thing is going to move, and you just want your own individual market where you're like, okay, there's going to only be so many sophisticated investors in Palantir, but at this price, I'm sure when it was like 200 or whatever the price was, I don't even know if it ever got that high, but I think that Palantir has at one point been the bell of the dance, where people loved it and it was one of the meme stocks and people followed it really hard and aggressive and they loved it. This may not be that day, especially when you look what gold is doing. And actually, I'm going to go ahead and look at GLD really quick. So what we can see instantly with gold is that it's essentially just been moving up. We're all the way up, looks like $187.69. We have generally volatility in the volume that is spiky, but it's kind of falling, at least what the moving average is doing now. It's kind of plateauing, not really going anywhere. It looks like we have seen some dark days in the recent past. Around February, we dropped from 189 or 181 down to 168. Now we're all the way up at 187. We've hit a peak of 190. You want to feel good about it. It looks like the volatility, especially in gold, has really fallen, which is what you want to see. You want to see a small and falling volatility where it is just slowly grinding upwards. When we go ahead and look at the raw data is generally really positive, as we can see. And again, I keep highlighting this because it's so important, especially to me, is the 15-day, the 1 month, 3 month, and the 6 month are all positive. And you really want to value that 3 month and that 6 month over anything else. I mean, because the longer the term, the better the setup is. So right there, when you had a 3 month and a 6 month, if you wanted to wait until you got the 1 month, that was completely fine. I probably would have waited too, especially because it gave the go long signals. But there is a lot to be said about long-term signals. And what we see in gold looks like nothing else we're seeing in the market. I mean, I could think of what else is going to be up 6 months, 14%. I guess probably you could be in a meta. You could be, let's look at meta. So now looking at Meta, this does look a lot like gold. This actually looks even better because you are up 31% over 3 months and over 100% in 6 months. So Meta would actually be a very good play. What we can see specifically, though, is that we're in the middle of the range, actually. This is actually really nice. Let's go ahead and look at the trade range on Meta. The trade range, yeah, we're actually in the middle of it. You can tell. So we could go up to 258. We could go all the way down to 211. We'll just want to watch and see. I have my own personal preferences right now, but I don't think that this is necessarily going to be one way either or really strong, at least through this next quarter or two. I don't believe that banks blowing up, especially banks in their valley, are a positive thing for the backdrop of an economy. But Meta has been a very strong player. And exactly what I'm talking about, low and essentially falling volume. That is a signal of bullishness. You don't want to see these big spikes. These big spikes generally mean that there was a drop. Or if you get it here, if this was because of the big move upwards, that's positive. If it's still in the falling, that's absolutely great. That's absolutely great. Generally, rising volatility and sustained higher volatility means that things are going down. So we'll look at the chart here. Chart looks fantastic. Chart looks absolutely fantastic for Meta. I am impressed by what I see in these big caps. I would be remiss if I did not mention Carvana. Carvana has been a darling, at least of mine. I loved shorting it in 2022. It really hasn't been fun ever since it really broke, probably like $20. I mean, it's been fun, but once you got down there, you're really grinding it out for the final prices. But it looks like Carvana is back on the map potentially. This is quite stunning. You've got a break of 5-day, 15-day, 1 month, and 3 month, which, well, 3 month isn't there yet, but you do have this little break. So we'll want to see if this is sustained. I mean, you haven't necessarily hit the very top of the range just yet, but you did just get a change specifically to bullishness. Look at that chart, Carvana. Look at that chart. You maybe have done your tour of duty. Maybe you have taken your prison time. Maybe you have been a whipping boy long enough in the market. Or maybe, just maybe, this is the beginning of the absolute end for Carvana. I'm not sure. I'm just, based on what I've been reading on the street, what I've been seeing on FinTwit, it looks like this is not a great situation. That is a good chart, though. Must admit, that breakout, the move up in the range, because you can see that it clearly is, it's already incorporating it. The volatility had already started to increase, because back here it started flipping positive and then negative. Even in the middle, that's what that flipping is. When it's solid, that just means it's sustaining whatever the trade style is, if it's bullish or bearish. That's why you get these humps, and then it flips to bearish, and it just drops all the way down to where the top of the bearish range is, where if you're going to be bullish, you'd be going up there. And that is one of the reasons why when I look at a trade range, being able to build my own trade range gave me the flexibility to look at any stock that I was interested in, save myself a ton of time. I don't even have to ask the same questions anymore. All I can do is just take a quick look, type in the ticker, get an idea of what's in front of me in terms of volume, in terms of the range, versions of the stock. There's so much I put at my fingertips just by using the free tools that are in front of me, by getting a Google account and accessing Google Finance, and then understanding how to set it up and look at what type of ranges and what type of indicators. If I couldn't have done that, I don't know where I'd be right now. By not having it, you make it nearly impossible for you to have a true process where you can be repeatable all the time. It's the only way. By building a system and by putting together a model, I've really just made it so I don't have to spend so much time thinking and wondering, and I can spend more time just enjoying looking at the market and getting an idea of what might be going on in any stock at any time. So important. You want to see signals. You want to see the little signals. You want to see the little go longs in a sea of go short. You want to see if things are going to change because all of a sudden the 3 month has gone positive. And if you're not paying attention to that, I don't know. It just doesn't seem like I could do it myself. I don't know about you, but I wanted a better way. Thank you for watching. Let me know what you think in the comments below. Are you long? Are you short? Do you like any of these picks? Are you paying attention to the same things that Yahoo Finance is, or is there some other stock on your radar? I'll talk to you tomorrow. Hey, would you be interested in learning how to build this exact same model right in front of you in the next 90 minutes? I teach you exactly how to do it. I'm going to show you the conditional formatting. I'm going to show you how to get the data for free. I'm going to show you how to set up your actual columns. And I'm going to show you how to use this to be able to look at any stock you want to with just a type of your fingers. And you don't have to pay for a dime of the data. All you have to do is put in a little bit of your own time to build a tool that you'll have for the rest of your trading career. At the Bootleg Macro Model Building course for all traders, you're never going to have to pay for another service again. You're going to finally be able to create your own analysis. You're going to be able to understand your own independent view of the market without having to rely on charts or indicators that everyone else is using. I'm going to teach you how to build something that is so personalized to your trading style. It'll fit you like a glove, and you'll see the market in a whole new way. Learn how to build your own model and take back control of your trading tools. Make yourself a better trader by investing in the tools you trade with.